Here I am in the Manage Your Trades application at a particular stock that I've detected via a scan, and I'm showing you TCL Transurban Group, which is an ASX stock. It's showing candles with a periodicity of daily. It's showing that it was scanned under a particular scan type called 3 trends long, which is momentum based, where there's a strong trend in either the long or short direction. In this case, it's a long. The view shown to you is a 6-month view historically, and I'm just going to go back historically. You can see that the trend has been well maintained even up to 5 years, 60 months. So where we're at now with this particular stock is at its highest price ever, and we're going to look at a potential reward to risk ratio that we can choose to take this trade. So on the form, there's a tab here called Identify Risk Reward, and in it is an indicator. Now, just to talk a little bit about risk and reward, what we'd like to do is choose an appropriate point under the high of this peak here, at which we can hide behind and say, well, that's a reasonable position to take as a risk, and then see how much reward is available to us. Now, if we look at this indicator here, and I'll just read it across from left to right, it says, show the points of demand between 2 and 4 ATRs below the most recent peak plus 2 pips. So we're looking at an area between 2 and 4 ATRs distance below this peak, because we'd like to take an entry point 2 pips above that peak there. So what I'm going to do is I'm going to click on this indicator, and you're going to be shown all the information that's necessary to present to you a default reward to risk ratio. So I'll just drill in a little bit now, and I'll go to a 2-month view. So in this 2-month view, what I want to draw your attention to is, first of all, the blue line here, the blue vertical line, is the reward, and it stopped itself at a price of $9.90. Now, as I showed you before, the stock hasn't ever reached this price, so there are no previous long-term peaks or troughs that might act as a point of resistance when this stock hopefully goes higher. So what it's chosen is an artificial boundary of a round number of $10 and a potential area just under the $10 mark, where we'd like to say, well, if we reach this, we've done very well out of the trade, and that's where we'd like to take profit. The orange line here represents the risk. So it's drawn down to a point where it follows this sentence here. So I'll say it again, show points of demand between 2 and 4 ATRs. So how do we know what 2 and 4 ATRs is in this chart? I have a grey zone drawn on the chart, which is, here's the entry price, there's 2 ATRs and there's 4 ATRs. So the grey zone represents the 2 and 4 ATRs. So we'd like to look for a place to hide, to place our risk in that zone. Now, over here, once I clicked on that indicator, I'm presented with more buttons to help me choose. If I'm not happy with what the system has decided, then I can modify it as well. So the orange dashed lines here represent points of demand that are 0.5% below that point of demand. Now, it's not easy to see why the orange lines were drawn where they were, because they rely on you knowing where the peaks and the troughs are. So what I'm going to do to give a bit more clarity is I'm going to tick on peaks and troughs. I'm going to look over here I'm going to say, well, that's the entry point. 2 pips above that is where I'd like to take the trade. I'm going to look and I'm going to see there's a point of demand there, and that orange dashed line is 0.5% below that. There is another point of demand there, that peak. Now, why is that a point of demand? It's because the price action has actually already broken that peak, and as it has broken that peak, what was a point of supply in the market now becomes a point of demand because it has been broken. So the distance between that trough there and that peak there is very minimal, and that's why you see the 2 dashed orange lines being not far apart. So those 2 dashed orange lines are still above the 2 to 4 ATR boundary. Now there are also other orange dashed lines drawn, which if we go down, you can see that there's a point of demand there, that trough, and there is the orange dashed line, which is 0.5% below that trough there. Here is another one, which coincides with this trough here. So we have more points of demand that we could continue to hide behind, but the system by default hides behind the first 2 that it finds. So this button here, the risk button, in brackets, it has 2 next to it, saying that I have drawn an orange line from the entry point down to 2 points of demand at least, and you can see that it's right on the start of the 2 ATR boundary. How do I know that? Is because I can see the risk ATRs is 2. The reward ATRs, the blue line here, are 6.3. So that in a ratio is 3.07. So the way the chart has currently been drawn, it has a reward to risk ratio of 3.07. Now if I say to myself, well look, I want to be more conservative, I believe that that's still not far enough below the entry point, I can keep clicking on this risk button and it will continue to draw that orange line below to the next point of demand and the next point of demand. So as I'm clicking the button, you can have a look and see that the orange bar is itself traversing between the 2 and 4 ATR range and showing the other points that I could use as potential risk stops. Now as I do that, you'll also notice that the reward to risk ratio is changing. The information over here is changing, which I'll go through shortly, so that you don't have to calculate anything yourself. It's automatically done for you by the system. Now the indicator itself does have some flexibility. By default you're shown 2 and 4 ATRs, this zone here, but you can in fact reduce that to just say 1 ATR below the entry price, and you can increase the lower boundary up to 6. So you can see that as I've done that, more points of demand are drawn for you automatically within that 1 to 6 ATR zone. I'll just bring that back down to the default, and I'll explain to you some of the information that's presented underneath. So the entry price here is shown as $9.07. Now if I look at the high of this peak and I cast my eyes to the top right hand side, I can see the high is $9.05. So that's 2 pips above that high. So that marries with this sentence here. Most recent peak plus 2 pips. Now I can also choose that I say, well no, I don't want to definitely go higher than 2 pips above that peak there. I'd like to go 2 pips above the most recent candle, which looks as though it's not going to quite get me to that peak. I still give you the option of doing that. So we have the most recent peak and the high of the current period. So it's drawn you now a entry price which is 2 pips higher than the most recent candle. The most recent candle's high is $9.02 and the entry price is $9.04. The risk stop here is shown to you, and you get to see what price that is at. So currently, where it's been drawn, which is at the start of the 2 ATR boundary, behind 2 points of demand, it's $8.77. The reward stop is $9.90. This also tells you the number of pips that belong to the risk and the reward. So those in a ratio are the same as the risk ATRs and reward ATRs in that same ratio of 3.19. If you want, you can also change the distance that you can hide behind that point of demand. By default, it's 0.5% below that point of demand, and I can change that to 1%, 1.5% or 2%. So as I'm doing that, you may see that the orange dashed lines on the chart are also adjusting to that same distance behind that point of demand of 0.5%, 1%, 1.5% and 2%. The default shown to you is 0.5%. In the reward, it's shown as 1%. So in this case, the artificial boundary chosen was $10. The reward minus 1%. So 1% of $10, 10 cents. So it hides at $9.90. Now, take it that this is a scan, and we're getting some indication now that we could get some value out of taking this trade. The numbers here presented are given to you by default, but down the track, when I show you in other videos, you'll be able to modify these. You mightn't like exact numbers. You might want to say, well, $9.90, that's still a bit round for me. I'd like to just go 1 pip again below that, at $9.89, $9.87, $9.83, whatever you feel comfortable with. But take it that this scan is, the whole purpose of this indicator is to give you a comfort feeling that it's in a good reward to risk ratio. The other area we can adjust is also the number of pips that we'd like to go above or plus the high of the current period or the most recent peak. Now you see, even as I adjusted the most recent peak and high of the current period, the reward to risk ratio itself changes automatically. The boundary is still the same, but the entry price, because it's changing, it changes the distance or the ratio of the risk and the reward and automatically calculated for you there. So I'm now just going to show you, just for the purposes of the indicator, what happens as I increase this value. So I'm just holding my button down on that numeric, and you can see that the graph or the indicator is adjusted accordingly. So the 2 and the 4 ATR boundary are moving in relation to the entry point, but the reward stays the same, and the risk is also moving in accordance with it as well. So even though I've moved the entry price, you can see that I'm still wanting to hide behind 2 points of demand. So the orange line is still taking me to those 2 points of demand, even though I'm changing the entry price. So you can see it's a very powerful indicator that very quickly and easily shows you a reward to risk, presents all the numbers for you to avoid you having to go through the painful calculation process and possibly error-prone process of choosing a suitable risk and what is a suitable reward. Now I'm just going to uncheck this indicator so we can just remove some of the noise and just remove peaks and troughs, and we're left with one horizontal line which I didn't talk about, so I'll bring that back into view again. Now what the system also tries to do is it tries to tell you, okay, what is a previous dominant point at which you'd like to be comfortable that the market is at least matching, getting close to, or has broken above. So if I draw the dominant lines, you can see that there it is there, and I've automatically drawn for you the horizontal line, so you can see that the stock on the high of this candle did actually pierce that dominant peak, and so we have actually tested it. This market is coming down. We have a white-bodied candle indicating that there now is demand back into the market, but the system has chosen by default that we should respect this point of demand, and we should choose an entry price above the peak as opposed to an entry price which is just the most high of the current period. It's just a safeguard. So the system does a lot of background checking about the current state, the history, as to where is the most appropriate point. Now you as a user, you can change what you like. It's just that this is probably a conservative approach to give you a good entry point in case the market, as we know, which can change at its will, may continue to go down. So we'd like to pierce this 2 pips above the high of that peak, and I believe that when we do, there's a good chance that the stock will continue to go higher. Now what I'd like to draw your attention to is some relative strength information that's shown to you on this chart. Now I'm just going to remove the indicators, and let's look at this line here. The relative strength, S&P ASX 200, the major indice for the ASX for this stock, it currently is in a situation where it's a low risk short market. Now I'll explain in another video where I get that information from, but it's telling me just at a glance that the ASX 200 as an index is not going gangbusters. It's actually telling me that we're in a short market if you were to follow that index and where it's trading. But as a result, this particular stock is trading very well. So it's going against what the major index is telling us. Now, there's a longer term, a medium term, and a short term strength indicator against the ASX 200 for this stock, and a number of little squares are shown to you, a meter, and so many of them are filled in both a long term, medium term, and short term. Now, they represent on this very last candle here how the strength of the trend in this stock, TCL, Transurban Group, is going relative to the ASX 200 for the same periods. Now, if I want more information to show me the history of the relative strength, I have an indicator here, the relative strength comparison. Now, a lot more information is shown here, and I'm just clicking it, I'm docking it, and I want to draw you to your attention that from left to right we have long, medium, and short. As I hover my mouse over, I can see that it's also telling me which candle is represented on the chart as I hover my mouse over these bars. Now, what it does, it compares in a short term. If we just look at focus on the short term here, this bar, which I'm looking and seeing it's 0.318% higher in relative strength in the short term than is the ASX 200. So you can see here that I've coloured in 4 bars, which is telling me it's in the 0.3 to 0.4 range of being higher in relative strength than the ASX is at this point in time. So it's a quick way. I keep this on the chart, and it's available in every chart, so that we can have a quick visual to see, great, it's all green for one, and how many of these squares are actually coloured in relation to the available number. And so that tells me that the relative strength is very good in comparison to the ASX 200. Now, Transurban Group is in a sector. Now, if I click down on the ASX 200 drop-down, I see a list of all the other Australian sectors that are measured. So I can choose any one of these, and if I'm familiar with each stock and which sector it belongs in, I can choose that sector. So if I just choose, say, industrials, I will see that the relative strength has now been adjusted for the sector, the Australian sector of the industrials. And we can also see that the number of coloured boxes on these meters has stayed about the same. So we can see historically that particular sector and how it's compared over time. So more recently, this particular stock has got a very strong momentum behind it, going a lot higher than what the major sector, in this case the industrials, is. Now, as I'm hovering my mouse, again you can see which candle is represented by which bar on the chart. Not only when I hover above this, but if I go to the medium trend, I can also see the same effect. Next, I want to talk about the life cycle of a trade or trading and the stocks having their life cycle. So what I've shown to you is just the early detection phase or stage of trading. So here is a list of stocks as chosen by the application as being the best daily picks between market close and market open, giving you time to have a look and decide whether or not your capital, you have enough capital to put some money against these stocks. Now, scan detection is great. Picking the stock, that's great. But my system also allows you to take a stock through the entire life cycle, from stock detection through to completion of the trade. Now, at this stage, we've got a stock that we'd like to choose, and we'd like to shuffle it into another status. So this area of the form here represents the workflow that's necessary at this stage of trading. So what's necessary at this stage of trading is detecting the stock and saying, yes, I'd like to progress it further. So the next stage is, or the next status, will be a status where we're actually awaiting a setup. So what I consider a proper setup. You know, the indicator here has given you the broad brush view, but the proper setup, there's a little bit more involved. We need to be specific about what our entry price, risk and reward will be, down to the the cent. And we also want to know, in relation to this reward to risk ratio, we may want to get out well and truly before the stock gets to the $9.90 mark. So we'd like to see what our 1-to-1, 2-to-1 and just under 3-to-1 reward to risk ratios would be as other potential areas to take profit in this trade. So that is not presented to you on this form. You need to put the stock into the next status, which is awaiting setup. So where we go to do that is in this workflow area on the right hand side. Typically when you look at any status will be what you need to do to get it to the next status point. So here all we need to do is accept and go to the next stop, or we can pass and go to the next stop. So by me clicking on accept, what it will do is very quickly remove the stock from this list, present to you the next stock so we can do the same thing again. So if you like, the workflow here is to go through the list one by one, removing them from this list and putting ones that are acceptable to go to the next stage, which is the awaiting setup. So let's do that, accept and go to next stock. TCL Transurban Group updated to status awaiting setup. Great. Click OK. And along comes Telstra Corporation. And again, the same discussion can be had about this stock and why it might be a suitable stock to pick for the market entry point at the start of opening of the market. So that's all for this video. So the purpose was, again, in summary, was to show you an indicator which very easily and quickly presents to you a reward to risk ratio, why it has chosen that, and also some additional information allowing you to not only compare against the major indices of the stock, but also to any other sectors that you prefer, to just make sure that you are still getting the best of the best in your stock picks.